I'd like to share some information with you today regarding a product we're having a lot of success with our clients, and that is a temporary buy down. Now, I've talked about this in the past, but here's a little twist to it. We are now offering it where we will do a 1-year lender paid temporary buy down. So when I've talked about buy downs in the past, we've talked about the fact that you need to get the seller to give you some concessions in order for this to all happen. Well, let's say you can't get any seller concessions. Well, this is something we can still do for you, our clients, and offer this temporary buy down so that we can save you some money the first year. So how it would kind of work, let's just take an example. Let's say you're going to borrow $450,000 and the note rate is 7.5%, 30-year fixed. We would temporarily buy the rate down to 6.5% for the first year. And then years 2 through 30, the rate would adjust back up to the note rate of 7.5%. That note rate of 7.5% is going to be $300 more per month than the bought down rate of 6.5%. So for the first 12 months, we save you $300 a month, which is a big savings when you think about it. Now, I mentioned that sellers may or may not give you any concessions. Let's say you're fortunate enough and you get some concessions from the seller, but you don't get quite enough to do what's called a 2-1 buy down, where we would buy the rate down temporarily 2 full percentage points. But we get just enough that we can cover part of it from the seller and then the balance from us, the lender. So how that would kind of work is, again, utilizing that same $450,000 loan amount, and your note rate's 7.5% the first year. We buy it all the way down to 5.5% for the first year, which would be like $600 a month less, almost $600, a little bit shy of that. And then in year 2, it goes to 6.5%, which is still $300 a month less than the 7.5% note rate. And then it's the third year through the 30th that you're paying that full note rate of 7.5%. If rates come down in the next 12 to 24 months, as many people are anticipating, this would allow you to go ahead and maybe refinance and lock into a lower rate and never even see that 7.5% rate. So this is just one more reason why it's a really good time to take advantage of the market. There's not as much competition out there right now. And yes, I realize that 7.5% is a lot scarier than 3.5%, for example, but it's still a good solution. So if you want to see if this is something that might work for you, please reach out to us, give us a call. We'd love to discuss your situation, love to help you out any way we can. Have a great day, and we'll talk to you soon. Bye-bye.